The opening for the market. A couple of stocks do deserve mention though. M&M Finance, the disbursals, monthly disbursals have been pretty strong for M&M Finance, up almost 29% month on month. So do keep that stock on your radar, up 3.5% right now. And something like an MTAR Tech, where the revenue growth was pretty strong, almost 40%. That stock also on our radar. But Gati is what we're tracking right now after the Q2 earnings. The operational improvement continues for the company. This quarter, the EBITDA was up 25%. Margins have also expanded to 4.6% versus 4% last year. Remember, Gati's target margin by Q4 is 9%. We have Pirojshaw Sarkari, who's the Chief Executive Officer at Gati. He joins in now to talk about the way forward for the business. Mr. Sarkari, good morning and thanks a lot for joining in. First on the margins, right, since we mentioned it up front, you have a target of 9% by Q4. Are you on track to meet it?
So first of all, good morning and great to be back after a 3-year gap.
Sure.
I have been away from CNBC for 3 years now. Yes, our EBITDA performance for this particular quarter has been good. We have grown the EBITDA quarter over quarter by 58.8%. And if you look at the half-year growth, it has been more than 200% growth. And when we talk Gati, we should talk Gati's express logistics business, because there is another business which is a fuel pump business in Gati, which we have identified as a non-core business, and we'll be shifting that out. Even if I add consolidated numbers, the EBITDA is at 28 crores with a 53% growth. We definitely are on track as per our guidance that we had given earlier. And I think we have done a tremendous job on operational efficiency in both the first and the second quarter of this year.
All right. So, hi, Mr. Sarkari. Good to have you back on the channel. So, as you said, you're looking at that margin target of 9%, right, by quarter 4. That's in the next 2 quarters.
Right, absolutely.
Okay, got that. Also, the other goal that was given out earlier was you're going to be looking at an annual run rate of around 3,000 crores odd. You're currently around 450 crores on a quarter basis. When do you get to the 750 crores on a quarterly basis? Or you could give us a roadmap as well, say 550 crores in the next couple of quarters or the next few quarters, such that the annual run rate you get to around that 3,000 crores.
So I have said this before, our exit rate of financial year 26 will be at an annualized run rate of 3,000 crores.
Okay.
One must understand that All Cargo has bought out Gati just about over 2 years back. And one of the imminent initiatives that we had was, of course, to make Gati great again. And I say this because Gati has always been an iconic brand in the Indian industry. So we've done what is required as a cleanup in Gati. We have sold off a lot of non-core assets. We have developed new infrastructure. And I think we are ready now to grow this business to the next level.
All right, Mr. Sarkari, but could you give us, if FY26 we get that around 3,000 crores, but in the near term, say for FY24, what kind of a number are you looking at? You're saying that margins are going to go to 9%. Do they go to double digits? I ask this because you have a listed peer that gets far higher valuations because of the margins they do. TCI Express, I think they get 15, 16% odd margins. So when do you go to double digits? Your targeted ROC and revenue run rate, should we work with around 500-600 crores for FY24?
So I'm not going to give any guidance for FY24 over here, but I can definitely tell you that a double-digit EBITDA will be achieved by next year, 3rd or 4th quarter.
Okay.
All right. Double-digit EBITDA by the last quarter, basically, right? Next year. That is FY24. Mr. Sarkari,
yeah.
Just provide us with an update on what is the schedule on opening of some of these mega hubs that you've been talking about. There was, I believe, some delay earlier. What have you done in this quarter and what's the plan?
Absolutely. So the plan was to set up 8 mega hubs to enable us to grow the business to the next level. We have, as you know, developed the Farooq Nagar, the North India hub last December. As we speak here, we are shifting into the Bombay hub, and that will be operational as of today, tomorrow. We have in the interim also set up Nagpur and Guwahati. These are our central and northeast hubs. And come January, we'll be setting up Bangalore. Now, it is very important in our business to have the right infrastructure. Otherwise, we cannot grow the business because our business is very operational intensive. So just to give you an idea, we move approximately 100,000 tons of material every month in Gati, and that's huge volume. And if you don't have the right infrastructure, which we call hubs, cross docks, it becomes extremely difficult to turn around trucks. So we are on the right path. And I would say by the end of this financial year, we would have our first lot of infrastructure ready so that we can take on the growth.
Yes, okay. Very quickly, sir, before we let you go, we're getting to market open. Could you tell us your market share was around 8%? When does it go to the mid-teens? Point number one. Point number two, just clarify, is there a merger on the cards with All Cargo?
So market share in this industry is looked at from two angles. There is an organized market and an unorganized market. And if you see the organized market, which is about 25,000 crores worth of market, then from that perspective, our market share would be about 8 to 9% today. Again, one has to understand that it has been 3 years of cleanup, and therefore we are now ready to hit the market in a larger way. With regards to your second question,
merger with All Cargo.
So Gati is a listed company, and we will remain an independent listed company in the near future.
All right. We look forward to speaking with you more. Thank you very much for joining us, and good luck with all that you outlined as your business plans. All right, that's Gati for you, but we are approaching market opening. Sudarshan is back with us for the 9-10 call. Sudarshan, good morning again. What do you have?
Well, the Nifty is a buy once it consolidates after the decline. Ultratech is a buy with a stop under 6,700.
All right. Well, that is on Ultratech Cement. Mitesh, how about you?
I will go with the buy on Sun TV with the stop at 532 half for targets of 570.
Okay, got that. Did you say Sun? You said Sun TV, right?
That's right, yes.
Okay, Sun TV, got that. I just wanted to also point out Bajaj Auto is one of the stocks that's trending in the green this morning. Morgan Stanley has upgraded Bajaj Auto to an overweight from an equal weight. Now, it's very interesting. They have a price target of 4,309, which is almost a 15% upside to the current market price. Now, this is a contrarian call because, Bajaj Auto has been going through a lot of issues with respect to exports. But Morgan Stanley says that the export slowdown risks are largely priced in. They've built in a 20% decline in exports in FY23. And Bajaj Auto now has a strong portfolio of brands, whether it's the Pulsar, the KTM, the new Triumph launch in 2023, and that should help the business gain share in the premium motorcycle segment. So we just pulled out the numbers in terms of the domestic sales, and one very interesting trend is that the last 3 months have seen a good pickup in domestic sales for Bajaj Auto. Just look at that trend from an average of about 1.5 to 1.8 lakh units. It's gone all the way to an average of 2.5 lakh units. So clearly the domestic market is picking up, and that's perhaps something that Morgan Stanley likes. Hence the stock as well is trending in the green this morning.
Okay, all right. Well, that's about Bajaj Auto. By the way, we're just getting into market opening. It's not as bad actually what the SGX Nifty was suggesting. SGX Nifty was suggesting 160 to around 170 point downtake. That's not really the case. We're down close to around 110 points. So a deeper opening actually would have been preferable for the bulls because you're getting a sharper downtake to enter into the markets if that was the call. Well, the Nifty Bank is well down close to around 270 points. A couple of stocks that deserve special mention from the Nifty pack itself. Bajaj Auto, as Sonia mentioned,